Oh, good morning. It is Tuesday, September 22nd, 2022, and I am Kenny Polcari, your host of the party. And look out the window, you can see it's starting, right? The remnants, not the remnants, actually the beginning of Hurricane Ian, which is still way down by Cuba, but we're starting to get the wind and the rain here. It started late last night, early this morning, however you want to look at it, and I think it's going to rain here all day. So for anyone trying to get out, I'm trying to go to Chicago, I'm not sure I'm going to make it. In any event, what do we need to know, and what is the market doing? And as expected, the Dow theory continued to play out yesterday as stocks got slammed. Global bond markets sell off, sending yields higher around the world. UK currency markets in turmoil, and that's just adding to the angst. The VIX surges above 30, suggesting more volatility to come, and OPEC is watching the oil markets, ready to intervene. And what do we have for dinner tonight? Well, we're going to have the chicken thighs with carrots and potatoes and onions and garlic and a honey sweet chili sauce. Delicious. Market-wide circuit breakers, although today I don't think you have to worry about it because the markets are higher, but just so you know, the S&P would have to lose 255 points to trigger the first stop. It would have to lose 475 to trigger the second stop. It would have to lose 731s to trigger a 20% move and a trading halt for the balance of the day. Although today, like I said, I don't think there's that we have to worry about. Look out the window. I think that's more important. And stocks continued to collapse yesterday as the Dow theory suggested on Friday when the industrials breached the June lows, confirming what the transports were telling us. They moved lower based on what the bond market was telling us, and they moved lower based on what we were telling each other. Central bankers have again been slow to respond. That is until recently, when suddenly they're raising the roof and they're raising the risk that we've all been seeing. They finally fully recognized and appreciated it, forcing them to change their narrative that they had this under control and that they could navigate a soft landing. And rather, they're going to start to tell the truth now that they need to be much more vigilant and aggressive in order to tame inflation. So therefore, they're going to push rates up and bring the economy to its knees. That's the new narrative. Sunday, as I said yesterday on Face the Nation, we heard from Atlanta's Rafi Bostic. He told us he was confident the Fed would ultimately succeed, but they would be paid along the way. Then yesterday we heard from ECB President Christine Lagarde, and then Cleveland Fed President Loretta Mester, who said this, which I think just added to the angst yesterday, right? Inflation is unacceptably high, and uncertainties make monetary policy decisions not trivial. Uncertainty will cause policymakers to act more aggressively because aggressive action can prevent the worst case scenarios from actually coming about. That sounds fairly hawkish to me. We also heard from newly appointed Boston Fed President Susan Collins, who continued with the hawkish commentary, acknowledging that the challenge to control stubbornly high inflation remains. Then our friends at Goldman, they took equities to underweight, which is a downgrade after the market's off 30% and 25% respectively. They took it as a downgrade through the end of the year, saying that rising bond yields and rising risk of recession are real and have further to go. The risk of recession? Is that what they said? I mean, come on, that's now comical because it's not about the risk of one. We're in one. Wake up, Goldman Sachs. On a side note, my gut tells me that Goldie is flashing all kinds of sell signals, right? They're out, while they're telling you to sell it, they're out buying it up, right? They're telling you to sell as they buy. That's just, 40 years worth of experience. Trust me. I hope I'm wrong, but something tells me way down here, I'm not. Recurring macro data points that confirm the state of the global economy and the pace of inflation seem to be a daily occurrence, and they're not bullish. Third quarter earnings pre-announcement, otherwise known as estimate revisions, are now happening as I expected, and they are not good, which should not surprise anyone because we were told that during the second quarter reporting season, right, over the summer. Volatility, which somehow has remained muted for months, has started to lift its head, up 40% since last week and up 70% since mid-August. Closing at 32.26 last night. Now that's going to pull back today because the markets are up, but we'll get to that. Global bond markets are all under pressure. 2-year treasuries yielding 4.28. The 5s are yielding 4.12 and the 10s are yielding 3.85. Bonds in Europe and Asia are also under assault as the prospect of higher rates takes its toll. In fact, Japan announced an unscheduled bond buying operation as yields there rose and tested their upper limit, their tolerance band. 30-year mortgages yesterday were quoted at 6.8% for conforming FHA loans and 7.55% for jumbo. And as the dollar continued to climb, just think about what's going to happen to the housing market. Expect to start hearing about the dollar strength now, how that's going to impact earnings for the big multinationals. But let me be clear, that is not a new phenomenon. So if you're an investor, you already know that a rising dollar is going to negatively impact earnings. So it's not a surprise. The issue will be, how come the analysts and the CFOs didn't understand this? Take a look at the chart. The dollar index has been rising all year. In fact, it's been rising since June of 2021. It's up 18% since January and likely going higher as the Fed gets more aggressive. So estimates will have to come down to reflect the toll that rising dollar is going to take on these companies. My suggestion is that any company that needs to revise, they should do it sooner rather than later. Get out in front of it, right? Don't wait until you announce, because if you do, it's going to look like you didn't have a clue about what was going on. Yes, you're going to get punished like they did to FedEx, but my guess is you're going to get punished even more if you wait until the day you announce. That's just my gut. You do what you want. Look, the economy is weakening, inflation remains elevated, and central bankers around the world are getting more and more aggressive, and that is causing angst for investors and traders, while it's causing the algos to implode. By the end of the day yesterday, there was more blood on the street. The Dow lost 330 points, or 1.1%. The S&P down 40, or 1%. The NASDAQ down 65, 0.6%. The Russell gave back 24 points, or 1.5%. The transports lost 130 points, or about 1.1%. We're getting more Fed speak today. At 6 o'clock this morning, we heard from Chicago's Charlie Evans. At 7 a.m., Jay Powell was participating on a panel concerning digital currencies. Later in the week, we're going to get JJ again. We're going to get Governor Bowman. We're going to get Vice Chair Lael Brainerd. Then we're going to get Governor Bowman again. I suspect that the others are going to make commentary that support their colleagues, right? Think Jimmy Bullard, Mary Daly, Johnny Williams, and Neeli Kashkari, to name just a few of them, because all of them like to take to the podium and give their opinions about what's happening. And they'll now go in unison, right? Again, every sector except consumer staples was under pressure yesterday, while the hedgy trades rose, right? The contra trades, the short, you're going long, the ETFs that actually go short the market, right? Those rose in value. Economic data due out today, durable goods, expected to be down 0.3%. The Conference Board confidence survey of 104.5, the Richmond Fed survey of -10, and new home sales, they're expected to be down 2.2%, but remember, these are stats from August. I suspect we're going to start to see larger declines in housing numbers in the months ahead. Oil is finding some support this morning after OPEC Plus announced that they are monitoring the situation and do not want to see oil prices collapse. Kavish, remember what I said yesterday? What will OPEC Plus do now that oil is under pressure? They will not sit on their hands. They will not sit on the sidelines if oil continues to fall. In fact, many are expecting them to intervene. West Texas is up $1.50 this morning, trading at 78.20, which is a level that was last seen in the fall of 2021. Gold is up $12 this morning at $16.45 an ounce after trading as low as $16.28 on the back of that strong dollar. U.S. futures, like I said, are up this morning. Dow Futures up about 230. The S&P is up about 30. The NASDAQ up 185. The Russell's ahead by 30. There was nothing new other than the fact that many analysts are saying that we've gotten into an oversold position, and that is causing this boomerang reaction. But don't worry, Goldman has plenty for sale, right? They bought it all yesterday when they told you to sell, and now on the way up, they're just going to be peeling it out to you. European markets are all up by more than 1.25%. After also getting beaten up recently. Investors there keeping their eyes on the UK bond markets after the beating they took yesterday, based on comments by the UK finance minister last Friday about rates, about maybe slowing down, maybe not moving until November. Not good. The S&P lost 38 points to close the day at 36.55, leaving us just 20 points away from the June lows. Lows that were tested again yesterday when the S&P fell at 36.44, just 9 points away from the June low. This morning it looks like we're going to get a reprieve as global markets appear to take a breath, but I still think it's just a bounce, not the end of selling. You know me, I remain cautious ahead of the coming earnings season, which starts the week of October 10th. Right? And I'm also cautious of the month in October in general. That's a whole nother issue, right? I mean, we think about what's happened during the month of October over the years. And so it leaves you just a little bit uneasy. So what are we having for dinner tonight? We're having chicken thighs on the bone with carrots, onions, potatoes, and a honey sweet chili sauce. It is simple to make. You use one pan to make it on the stove and then one roasting pan to put it in the oven. You're going to need 5 thighs, bones in, skin on. You need a big large onion. You need 2 carrots, garlic, parsley, Yukon Gold potatoes, 3 or 4, salt and pepper. You need butter, honey, sweet chili sauce, soy sauce, Dijon mustard. Preheat your oven to 350 degrees. Start by seasoning the thighs with salt and pepper on both sides and then set them aside. Slice and cube the potatoes into just bite-sized pieces. So cut them in half again, and then just cube them, right? Slice the whole carrots into rounds. Just chop, 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 chop. Dice the onion, smash, and then chop the garlic, like 3 large cloves. Then chop the parsley, put that all in separate dishes, and just set it all aside. Now, in a large frying pan, heat up a stick, 1 stick of butter on medium-high. Let it melt. And turn the heat up a little bit and add the thighs, right? You want to fry the thighs in the butter on both sides until they are nice and golden brown. So maybe it's 5 minutes per side. You can tell when you look at it. You're not trying to cook them all the way through because that's going to happen in the oven. After you do that, set those aside. Now in that same pan, you're going to add the onions, saute for about 5 minutes. Next, add the potatoes. Mix it well. Let that saute for a couple of minutes. Now add the carrots. Mix and saute that for, 3 or 4 more minutes. Now add the garlic and the parsley. Turn it, mix it well. Let it kind of stay on the stove for 3 or 4 minutes just so it kind of comes together. Now in a separate frying pan, you're going to heat up 3 tablespoons of honey, 3 tablespoons of sweet chili sauce, and some soy sauce twice around. Bring it to a boil. Mix it, turn off the heat. Now add 1 teaspoon of the Grey Poupon mustard. Mix it all up so it all melts. Now in a large baking dish, place the potatoes and carrots and onion mixture on the bottom. Now put the thighs on top of the veggies. Then pour the honey chili mix all over the chicken and the thighs. Yum. Place it in the oven for 40 minutes uncovered. When it's done, you want to serve each plate with the thigh and then take out some of the veggies, which are really delicious. Now, making sure that you get some of the honey sweet chili sauce and you drizzle it all over the piece of the thigh and the veggies. You can serve that with a large mixed green salad if you like. Otherwise, you can just eat it this way because there's enough there to eat. The veggies and the chicken really provide a great meal, and you can serve that with your favorite wine, a light red, something even as simple as a Chianti would work for this because it's not heavy, it's not beef, you don't want something really, really heavy. You want something that's good, maybe it's a Pinot Noir, maybe it's a Chianti, but something that, will make you feel good. In any event, listen, I hope it stops raining long enough for me to get out. I'm on a United flight, so keep your eyes on United, just in case. In any event, until tomorrow, take good care.